All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is the last day of September, ladies and gentlemen. Today is Tuesday. Look, I wanted to pick up very quickly on something that's happening this week, and we're getting the U.S. job numbers. Look, before we jump into all that, of course, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. But yeah, basically, we are getting the U.S. job numbers this week. And today's Tuesday. Today is the last trading day of September. But at the same time, we're going to be getting today the U.S. JOLTS. Now, look, also, oh, by the way, although before we jump into any action, let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, now then, economic calendar, Tuesday, 30th of September. Let's have a look. This is the number that I am looking for. Where is that number? There we go. Oh, come on, come on, come on, come on, come on. There we go. That's the one. There we go. Got lost in the economic calendar. So, U.S. jobs. Now, of course, as you saw, we're getting the Chicago PMI, the CB consumer confidence figures as well. So these are quite important. On the Chicago PMI, we're expecting a higher number. On the consumer confidence, we're expecting a slightly lower number. But I think that the focus could still fall on the JOLTS. Now, why this matters? Because look, I mean, so far the job numbers are showing a decline, a quite significant decline. We have been, we have been at highs for some time, but looking at this picture here, you can see that look at this. Since let me just drop this. Since 2022, the beginning of 2022, we have been on decline. The number then we were around like 12 million. Now we're like almost half of that, and on the contrary, the stock market has been, rallying. So in a way, you would say, hey, what the hell? But I think that, of course, developments are happening. The market is getting fearful, and we are getting this discrepancy, and where you have a booming economy in a way. Technology is overwhelming us with new innovations every day. It seems like that. However, it's not really beneficial for most of the people. Look, we have to admit one thing, that AI is great, yes, wonderful. However, it's at the same time taking people's jobs. If they kept on saying in the beginning that no, AI is not going to take the jobs and blah blah blah, no, it is. That's the whole point of AI. You're optimizing business. It's helping you reduce costs. Now the entry level jobs can be performed by AI. And in a way, you don't need those junior positions. You just need a few seniors who are overwatching the function of the AI, and that's it. Congratulations, you're cutting cost. Of course, on one side, it's good for the business. On the other hand, you still need people. If the majority of people will be, let's say, struggling to find jobs, and your, let's say, AI is, doing great, then you still eventually need to sell your service to somebody, or some company, and that company maybe how to say it, it will have people. The end consumer is still the human. Whatever you're trying to create, you're trying to optimize a process, but you're optimizing a process for, let's say, for production of something, and that something will be consumed by human in any way. It's like either it's something, a product, or is it like a service. So still, at the end of the day, if everybody kind of starts losing their jobs, then who are you going to sell that to? Anyway, you got the picture, right? Look, don't get me wrong, I'm not trying to kind of be the pessimist here or anything like that, because everybody can say, oh, but you can requalify, you can do this. look, yes, theoretically you can do that. However, in practice, ask yourself, like, how many times, you would you like to requalify in your lifetime? Especially when you're getting closer to pension, and now you suddenly need to requalify to something else. Again, this is the issue. But anyway, we're seeing the dropping labor job numbers. And in the U.S. and this is called basically progress, apparently. So look, for now, what I'm looking at here is the market is expecting a lower number. So if it somehow starts falling kind of closer to 7, or maybe even falls below 7 million now, I think that's like going to be a worrying sign. So we're also getting the ADP figures on Wednesday. Let me just find those very quickly here on Wednesday. There we go. Where's the ADP employment change? There we go. Look, another issue in there. The number is expected to come out slightly on the lower side. Now, what's interesting is that we're expected to see a number. Let me just save this like that. We're expected to see a number kind of fractionally below the previous number. So somebody might say, oh, look, it's not a huge deal, right? The problem is that we're getting just closer to zero, and eventually we'll see a number falling below zero, like we had back in June. So when the figure fell below zero, let me just show you on the chart what I'm talking about here. So this is the June figure, which was released in July. It came out below zero. So basically, that was the first shakeup. We haven't seen this for a while now, since COVID times. Okay, this is the COVID period. This is when we crashed very quickly, but then we recovered very quickly. So now we have a gradual decline, which in a way is more worrying. And the fact that we're getting closer and closer to zero, I don't know. I really don't see a very bright future. Imagine this: we were back in the beginning of 2022, we were around like 600,000. Like in the beginning of 2023, we were around 300,000. We had a spike here in the mid 2023, back to like what, 400 something here, 500. There we go, something like that. And now we're back in 2024. Let's have a look. We were around 140, 50, maybe 200, roughly there. And now we're barely struggling. I mean, we're barely with, kind of trying, we're barely overcoming 100,000. And that's a bad thing. I really don't see this as I don't know how people can see this as a good thing, but I don't see this as a bad. I don't see this as a good thing. There we go. That's the words. I got confused with the words now. Anyway, so the problem here is that, like I said, and this leads me to the third measurement, right? Which is the NFP, which everybody really loves. The market keeps on watching it. We know that the central what's the number, by the way, here? NFP expected to come out a little bit higher, above previous 22K. That's the adjusted number. But let's also see what's going to happen with the adjusted number. Are we going to, what's going to happen with the previous number? How it will get adjusted? Because it will get adjusted, and in which direction it will get adjusted. So that's what I'm saying. So at the moment, yes, great, double the previous number, but I'm sorry, but the 50K, that's not enough. You have a growing population. And suddenly you're seeing this. I don't know how can you remain positive with numbers like that. Anyway, ladies and gentlemen, the way this could spill out in the stock market. Well, of course, this is one of those moments where bad news is actually bad news. And somebody might say, but hey, this is where it could, the central bank, the Federal Reserve could come in and stimulate with, more rate cuts and, provide positivity. It's like putting a bandage on a wound which cannot heal itself, So that's my kind of issue. You stop the bleeding for a little bit, but actually you're not fixing the issue. And you want it or not, eventually you will end up in some sort of bigger problems. Again, I do sound like a pessimist. However, However, I'm trying to be more of a realist, to be honest. And the stock market right now is, yes, it's pushing higher. It's great. It's wonderful. Looking at Dow, the S&P, Nasdaq, where we hit new all-time highs recently. Yesterday, for example, Nasdaq came very close to hitting a new all-time high, but actually failed to overcome the current all-time high. The S&P did similar to that, and Dow Jones actually was the laggard, the bigger laggard. So, and at this point, actually, one would ask themselves, how further this can go. In my opinion, I think we could go a little bit more to the upside, to be honest, because we're expecting the Federal Reserve to continue cutting rates. Let me just refresh this page, because until at least the end of this year. So, why is it like that? Oh, there we go. A little bit on the slower side today. Anyway, until this loads up, I'll basically tell you the picture because I remember it. So we're expecting the 25 basis point cut in October, and then by the end of the year, so this is the one that we're expecting right now in October, and by the end of the year, in December, we're expecting a two-cut move here by the Federal Reserve. So basically, by the end of the year, two cuts. Okay, great, wonderful. You want to create cheaper lending, right? But somebody's probably forgetting about inflation. And to be honest, that's a clear thing. So US inflation number year on year, let's have a look at this one. This is okay. It's still on the lower side, but to be honest, look again, this extraordinary drop, when you get something like a strong move, some strong moves like this to the upside and to the downside, this is okay. This is just maybe like a temporary shock in the market. It gets adjusted. And this was like after COVID, when then we were coming out of COVID, and then everything started like coming back to norm. So in a way, we could say that this is not a normal situation. It's more like a force majeure. Here we have a situation where it seems like the stock market is okay, but the inflation is slowly picking up. Yes, it's not critical. It's not really something, something that somebody needs to worry about too much at this point. But if you ask me to apply technical analysis on this little chart, you would say it's really, worrying me, because it's really opening the door to some higher levels. Because after a sharp decline like this, you get a gradual decline like this. This kind of causes a possible move to the upside. So basically, when you have like I said, a sharp decline like that, and then a somewhat of maybe like a falling channel formation, and like I said, in technical analysis, this kind of could lead to some higher levels. And this is a normal state of economy where we're operating, we're doing trade. Yes, somebody might say we're having tariffs, and tariff issues with the tariffs. Given that in normal in the economy, it takes actually for human beings to realize that there is a problem like about a year. So the tariffs kicked off in like since April. So if we're looking at for around a year, so next year people could start realizing that there's actually an issue. Anyway, because the businesses would start saying that this is how much they lost, because of this, because of that, because of these tariffs, and okay, yes, the government gained some extra money, but will the government actually put all that money into supporting the businesses? Again, it's a tricky one. So, long story short, for now, what we're looking at here is, like I said, a situation where the job market, the U.S. job market, we're watching it very closely. The NFP number for Friday is expected to come out double. My problem is that it's 50K. It's not really something extraordinary. It's something to be actually a little bit more worrying. Look at here. Like at the end of 2024, at the end of 2024, we were actually almost above 200, and that could be okay. Whereas being constantly below 100,000, I think that's not okay. So that's my opinion. You can agree or not. And actually, I would welcome you to debate with me and put it in the comments if you tell me that, hey, Darius, maybe you're wrong because you're missing on this, and this. Fair enough. I'll be honest with you. However, I'm not really, like I said, seeing a positive pattern at this point. If something changes, I might change my view, but at this point, not really. And again, like I said, I don't want to spread fear. I still believe the stock market could travel maybe a little bit more, or at least remain somewhere around these areas. Somewhere like it could start bouncing around, it could maybe start ranging, but I'm still, like I said, I'm not expecting a full major crash right now. No, because it would need to take a little bit of time, in my opinion. And with the upcoming interest rate cuts by the end of this year, I think that we're still okay-ish. Anyway, ladies and gentlemen, let me know in the comments what you believe or what you think, and if you agree with me or not. But again, like I said, I just wanted to share this very quickly with you. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.